That's what's going to keep you in this business. And I don't think technology can very easily replace is being that true advisor and guide.
Welcome to the Lendsetter Show, the show that blends the art of sales, the science of success, and the strategies of real experts in the mortgage and sales industries to help you grow your client base, increase your revenue, and get in control of your life. I'm your host, Preston Schmidley. Kick back, enjoy the episode, and don't forget to subscribe. What's going on, Lendsetters? Thank you for joining this episode of the Lendsetter Show. I'm your host, Preston Schmidley, and I'm here today joined by an awesome guest, a friend and an advocate of the broker world, Evan Wade of EpochOS. And we're going to talk about a lot of cool stuff today. But to let our audience kind of marinate and get an idea for who you are, Evan, why don't you talk about your story through the mortgage industry and how you've kind of gone from the origination side to now you're on the technology side supporting brokers. So I wanted to kind of just get them up to speed on your story and then diving into more specifics about the technology that you've created.
Yeah. So, first of all, thanks for having me. Honor to be on the podcast.
Yeah.
So as far as the mortgage industry goes specifically, I started out in retail banking. I was hired as a part-time seasonal teller when I was 19 years old. Wanted a good job to put on my resume. Everybody works in restaurants. I already learned my hustle and all of that, from 4 or 5 years of working in restaurants. So, I just wanted a better job to kind of polish up my resume at the time. I planning on going to college, all of that stuff. And quickly started getting promoted at the bank. They promoted me to customer service representative. That's how I first learned about the mortgage business. This was in 2009. So it's kind of the first refi boom was about to start hitting after the financial crisis. And the bank I was working for didn't have a big enough loan officer sales force. And they had recently merged. The bank I worked for was Commerce Bank, was acquired by TD, which everybody's heard of. TD Ameritrade, if you're on the East Coast, you've heard of TD Bank. So all of that was all kind of happening at the same time. And they were like, all right, we know we want to do a ton of mortgages. So what's the best way to do that? And they were like, we have this genius idea of letting everybody, customer service reps in the branch do mortgages. So as I always say, anybody in the mortgage industry can, immediately think it's a terrible idea. And it was, but it was a great opportunity for me because I just had like a instant attraction with lending and mortgages specifically. Nobody in my region of branches around me in southern New Jersey, Jersey Shore area, really had any knowledge of mortgages. So I just dove into it. They didn't even tell it. We did a 1-day class on how to take a mortgage application and difference between a conventional FHA, VA, and USDA loan. And that was it. And they didn't even tell us where to find guidelines and stuff like that. And,
wow.
I didn't even know Fannie Mae and Freddie Mac existed at that point. Like there's a portfolio bank. So, I just, was digging through the company internet and I happened to find all the mortgage guidelines and I printed them out and read them from cover to cover. And that's just kind of how I'm not a natural salesperson. I'm not good at sales, but what I am good at is learning a product better than anybody else and be able to speak confidently on that. So, I'm not very good at the bullshitting, but I can definitely, tell you with confidence what I think is, the right thing to do, how to structure a file and make it work. I was calculating DTI by hand. Like they didn't even get access to an LOS. So I knew I could get access to a portion of the credit report. So I would, literally write down all of their liabilities and their income and like, okay, which one of these can I scratch off to get the DTI to work? Well, I'll literally got a notepad. So that's kind of how I got introduced to the mortgage business. And, I got really frustrated with the bank. After being promoted to assistant manager, I felt like I was kind of hitting that glass ceiling. I wanted to get out of the branches, didn't get out of the branch. So I just quit on a whim. Didn't have anything, no job lined up, anything like that. I was just driving Uber to pay my bills. And then I did a brief stint for a company called Corporation Service Company. A lot of people might be familiar with them because they're one of the largest registered agent providers out there. So mortgage brokers out there that are licensed in multiple states know what a registered agent is. So that's where I kind of learned a lot about how to, form companies, file the LLC paperwork, all of that kind of stuff. And I was really good at that too. But it was boring, really boring. Just doing kind of warm sales, reaching out to existing customers, trying to cross-sell, upsell other services to them. And in the meantime, I happened to stumble on, back then, Facebook, it was called the other folder in your messages. Now it's called, I think, message requests. I still don't check it very often, but back then you didn't even get like any notifications or anything, and I didn't know it existed. So I happened to stumble on it. I was at all these messages. One of them was from a guy that really the only smart thing this guy has ever done. He went on the NMLS and typed in zip codes of people who were in the NMLS database, and then just cross-referenced who he could find on Facebook, and sent messages for recruiting. Hey, you want to become a loan officer? And then, I was like, would you hire me part-time? Because I'm still working for CSC, and I learned how much money you could make too. I'm like, ooh, that sounds interesting. Yeah. So while I was still working for CSC, I took the 20-hour class, passed the exam. And then once I got to the end of that, I was like, you know what? I was like, there's no way that I can be successful as a loan officer part-time. I have to dive headfirst into this. So, in about spring of 2015 is when I quit CSC after like 3 months of working there. And 2015 was like my kind of quarter life crisis of working for like 4 or 5 different employers in a span of 13 months.
Wow.
But some of it not my fault because we switched companies with this branch manager. But I got sidetracked there. But so, I dove in, head first about spring of 2015. Only lasted at the stage for about 6 months. He was like your prototypical fat margin, small retail shop, like extract every dollar out of every customer you can. And just those slimy sales tactics. And I don't play well with that kind of, way of doing business. So, I happened to also meet, Spiro Condeserdius from Movement. He's a market leader. He was just starting up the market in Philadelphia. And I hit him up. I'm like, will you hire me? And he took a chance on me. I was still, I think I only closed like 1 loan at that point. So like he had no business hiring me, right. But he did. And I just kind of took the bull by the horns with what Movement offered. Which is great for a new loan officer to be able to confidently go and say that you can get a loan done in 2 weeks, no problem. So I worked for Movement for about 2 years, built my business as an originator, all of that. And I just learned more, while I was there, I just learned more and more about the broker channel. And I knew at the back of my mind, I was actually going to do this before I joined Movement, just like dive in and open up a broker shop. But I was like, you know what, I'm still not even really confident as an originator, let alone try to start a company. So that's why I joined Movement. It was still back of my mind the entire time. Like I want to develop technology, and I'm an entrepreneur at heart. I need to start my own business at some point. That goes back to when I was like 8 years old, when my parents taught me what the concept of profit was.
Yeah.
And I doing a snack stand at the end of my street, trying to, sell snacks and lemonade to the truck drivers going up and down our street because there's a gravel pit at the end of our street. So, anywho, in the end of 2017, I approached a buddy of mine, Paul Carson, that was also in the Philadelphia area. And I was like, I was thinking about starting my own broker shop. And he was like, funny you say that, I was thinking the same thing. So really quickly, like within 2-3 weeks, we're like, this makes 0 sense for us not to do this. Like we can make more money deliver a better product at a better price with the same execution that we're used to in retail, because we both worked for good retail shops. But I wanted to provide a cheaper product and have that same customer experience. And I figured out you could do that in the broker channel. So we had to keep it secret for about 2 months because Paul was in the middle of building a house, and obviously he's getting his mortgage through his employer,
Well,
so
plus
he couldn't tell anybody.
No such thing
So
as a 2-week notice in this industry. So
exactly, yeah. Actually, I got that courtesy from Spiro because
really?
I was lucky to work for such a. Yeah, he was like, you can stay as long as you want. And Paul did not get that courtesy. We're like, sorry, you can't search your message, you're out.
Yeah.
So, but yeah, Spirit, like, you can stick around as long as because I told him as soon as I could, because that's part of it too, is like that honesty and not trying to do it behind somebody's back. Yeah. So literally, like the day after Paul closed on his house, I sat down with Spiro and was like, I'm planning on doing this. I'd like to stay, close out my pipeline, that kind of thing, waiting on getting our, company state license in at least Pennsylvania. Because we needed New Jersey too, because that's where I'm from. Paul does a bunch of business there as well. But, so we started, Philadelphia Mortgage Brokers in February of 2018 together. And I still remain a partner there today, and kind of help drive the strategic vision of that company.
Nice.
About 6 months in, I was approached of being a broker. I was approached to help with the Arrive project, which was, a really exciting thing to, democratize technology for the broker channel, because really the only choice you had was Calyx Point, maybe Byte. Some people went with, and then you had Lendsetter was brand new, but like nobody was using it at that time because it was only, maybe 2 years old at that point. I was one of the only brokers I knew of that was actually using Lendsetter. I've never used Calyx Point, believe it or not. I've used Encompass, I've used Lending, PC Lender, pretty much every LOS out there.
Right.
But I've never used Calyx Point, fortunately. And I did not want to start a shop using legacy 30-year-old software that really hasn't changed much in that 30 years.
Those systems too tend to be a good old boys club. We created one in the software vertical. Actually, it's the insurance, the property and casualty insurance world's version of an LOS is called an AMS, an agency management system. And we ended up building one that we got to 15 million and then exited, but it was very difficult.
Nice.
There's a the legacy tech has such a chokehold because it's even if you can come in, they tend to just buy out and squash, new technology. And so it keeps these industries in just like, it feels like a time machine technologically.
Yeah. And you've kind of seen that with Black Knight and ICE right now are kind of the two mortgage tech giants out there. And now they're trying to merge. The Department of Justice is like, wait a minute here. Like, you guys are about to have this, I don't know what it would be, 70, 80% market share in the mortgage industry, with basically every vertical of the software you can think of, from originations, the secondary capital markets, the pricing engine, point of sale, like document management, literally everything about the mortgage transaction is just would be controlled by this one company. So they were like, and that's why recent news, I don't think it's been 30 days yet, they spun off Optimal Blue and sold that to somebody else. So it's like, oh, well, we don't control the pricing anymore. That's going to go to that's going to now be a third party company.
FTC scrutiny?
Department of Justice, FTC, yeah, that's kind of their agreement to get that merger move forward. I don't know. I assume that is the agreement to make it happen. I don't personally think it's enough, but at least that piece of it, they don't have control of anymore. And who knows who they sold it to? I don't know much about the firm they sold it to. There could be some kind of
backdoor friendship.
Nothing surprises me. Yeah, nothing surprises me in this industry.
Yeah.
But what I love about Arrive is that it's still, it's an independently owned company. The CEO is on Facebook all the time, Harish, soliciting feedback, learning about what our needs are. And this platform has gone from, not nothing, and actually a failed first version, I like to call it, when they tried, you know, taking a bunch of puzzle pieces that didn't fit together and try to launch some software in 6 months. It just failed miserably. But then Harish came in and saved the day with his company, and over the last now almost 3.5 years, about 3.5 years now, it's blown up, and I think it's on its way to probably being the dominant player in the broker channel, because it's just, from an originator standpoint, it's the best LOS I've ever used.
Yeah, that's awesome.
And it's all in one unified system, and you don't have to connect all these pieces together. So it reduces that friction. Plus, they've got integrations with about a dozen lenders for registration and pricing and all of that. So yeah, I mean, that excited me. Kind of circling back, the promise of a software like that, and I wanted to be involved. So I consulted them for a few months, really just to go to the smaller broker shops and maybe more of the mid-sized, and just kind of find out what those referral-based loan officers want, because the original team that were kind of had the idea behind the platform are just those consumer direct lead generation type broker shops. And those companies are run in a completely different way than my kind of background is that referral-based self-generated loan officer, persona, I guess is what you would call it. So, a lot of my ideas were put in the platform, still there today. Believe it or not, the logo, that little arrow logo, was my idea.
Nice.
But just little things like that. I have my fingers in that platform. So, I decided not to stay involved with the project and be like an official employee or anything like that. But I saw the promise of what that could do. So that is why I got inspired to start my second mortgage brokerage within 12 months. Because I was like, I could build a national platform that really took advantage of the software, in the very beginning. And, it worked. I started Epic Lending we closed our first loans in February 2019. And quickly, recruited. We closed. We got up to, at one point, we were almost 50 employees. And we really proved that software, while it was very painful at the time, beta testing brand new software and running into all those issues, it wound up really paying off for me to grow a pretty sizable brokerage that scaled quickly. And then I identified other problems. Right. of the actual managing the deep business of a mortgage brokerage, where you're kind of just relegated to spreadsheets to manage everything. All your sales letters, your commission reports, everything has to be kept in spreadsheets, and it's a manual process. You're double entering data everywhere. Then you're throwing your bank account into the mix too, and how you match up your transactions with your bank transactions. Yeah. Calculating commissions is a huge pain. There's no way to get any, unless you're really good at like pivot tables and you're kind of some kind of Excel wizard. Yeah. No way to get some real-time data analytics and visualization. So I'm like, what? There's no software like this that exists today. And that's kind of that last kind of piece of the puzzle for a broker channel to be a broker shop, for somebody to say, all right, I want to start my own company and I want as much technology as possible to cut down on all of that business management stuff. And that's why I believe that the broker channel hasn't gone back to 50+% market share like it did pre-crash, is because people just want to originate, especially nowadays where, you're trying to get in a massively contracted market. You're trying to increase market share. The last thing you want to do is worry about, how do I run a mortgage brokerage? So I was like, I think technology can solve for a lot of this. Yeah. So enter my software company that I'm kind of soft launch. We haven't even really done any, crazy marketing yet, called EpochOS, which I like to say it's like a business management tool / ERP built specifically for mortgage brokers, by mortgage brokers.
So EpochOS, which the British version, if you've read it, I've made this mistake originally myself. I thought it was Epoch, and so through conversation with Evan, I have been Americanized on this. But EpochOS was really using Epic Lending as a testing ground. You were kind of proving the model, this solution on yourself, and through your experience with Epic Lending. Sounds like the age old necessity is the mother of all invention, right? Like you notice these pain points. So talk to us about what some of your, just going through that journey, what were some of the pain points that you experienced that you feel like is pretty standard for most brokers to experience, and how that led you to certain solutions within EpochOS?
Yeah. So for me, it evolved into the idea of launching a software company. Like I knew I wanted to start a software company. I always have, I started a website hosting business when I was a teenager, and do it back when Google ads were called Google AdSense.
Yeah.
I figured that out. We did free website hosting, put ads on there, and that's how we earned revenue. So I think we earned like $14,000 in like ads or something like that. This is probably back, I think it was right around when Google was going public. And, I'm like 13, 14 years old, pulling in, 13, 14 grand. I'm like, oh, this is pretty cool.
Yeah.
So that was kind of dipping my toes in the sand of, being in the technology space. And, it took me a long time to it really just kind of hit me in the face. I'm like, holy shit, like these problems can't be just mine, as I'm scaling. So my immediate thing that I identified that was taking the most time was payroll. Efficiently and compliantly calculating commission for loan officers, giving loan officers visibility and pay transparency in an easy way. We had no way to do that. So we're literally filling this out on a Google Sheet, sharing it with each loan officer individually, every pay period, barely making payroll on time. And I'm paying somebody over $40,000 a year, and about 40% of her job is just doing payroll. So I'm like, there's got to be a better way here. And there's only one other software platform that I know of that offers something like this in the mortgage industry. And I talked to them, and they were like, we'll cut you a deal. We think we might want to get in the broker channel. It'll be $600 a month. This is why I have 3 loan officers. I'm like, there's no way on earth that any brokerage, if they're smart, are going to spend that kind of money to calculate commission. I mean, I guess if it's better than paying somebody 40 grand. But by the time I got to that, on a scale, they probably would have been charging me more than 40 grand a year. Exactly. Yeah. So, I wanted to build something that was more economical for mortgage brokers. And then I was like, all right, now this piece of the puzzle is reconciling the revenue transaction. So if you're properly, we don't have to get it too much in the weeds on the counting, but if you're doing it properly, you should be breaking out the check in when you receive it, because you got your revenue, you've got your pass-through reimbursements that you probably fronted, like credit report, maybe appraisal, VOEs. If you're doing manufacturing, IBT, all these different reimbursements. You should be splitting those all out and assigning them to the proper account in QuickBooks. And it's very time consuming. And then if you want to be able to generate a P&L in QuickBooks on every single loan officer, you have to assign a class to each transaction as well, and each line in there. So it's, it could take you 10, 15 minutes just to, verify with your bank transaction and split the transaction, identifying who it's for, all that. It's just a lot of data entry and very time consuming. So what we're also working on building is integrating with QuickBooks to post those journal entries automatically. We're going to be, we're going to have the loan level, kind of reconciliation for the loan accounting, and then push it right into QuickBooks. So
That's great.
it's all kind of boring stuff, but it's so incredibly time consuming that now anybody that, they're hiring like a, compliance manager or whatever that's doing all this kind of different things. Now they're freed up to do other stuff to help the business grow.
So okay, that's a good point. So are you essentially saying that as let's say somebody starts an originator decides, you know what, I want to do this myself. I want to start my own brokerage. If they're successful at all, they grow to a point where they have a team, and when they have that team, that introduces new points of friction, which is obviously managing the systems for these people. And it sounds like what you're saying is that somebody who was successful has now, this is almost like being Peter principled. You've promoted yourself to the point of incompetence because now what got you here, which was being good at origination and recruiting or whatever, now you're stuck doing admin work. Is this?
That is the life of a broker owner, unless you happen to be lucky enough to hire somebody to do all of that stuff for you. Those people are hard to find. They're not cheap. So there's a lot of services out there that like help you with like compliance and other things, but they don't really go much into the weeds, at least what I've found and encountered. Like, you could pay, there's licensing services out there. Yeah, you can pay somebody $700 to get your company licensed in a new state, but you're paying somebody $700 just to navigate the MLS for you. They don't know, like they can't sign all those forms for you. They can't fill out a personal financial statement if you're getting licensed in a place like Virginia that wants that. Like, you're still doing all of this work. Maybe they're buying the shorty bond for you and helping you feel like, I don't see the value a lot of the time in what a lot of these companies offer, and they charge a lot of money for it. Maybe one of these days somebody will tell me I'm wrong.
Well,
but
I mean,
nobody has it.
Like the fact that they can charge for something that it sounds like you're saying is void of value for the most part. There's a market, obviously. I mean, if they exist, I mean, somebody's willing to pay it. And if somebody's willing to pay it,
it tells you that these broker owners either don't know what they're doing or are just trying to hire somebody to just, I guess, take the bull by the horns and do that for you. But like, why can't I build technology that says, all right, I've got this wiki here. I want to get licensed in Delaware. What are my expectations exactly of what I'm going to have to encounter? How do I do this? What is a registered agent? Back to what I was talking about before, because I see that all the time. Like, in a Facebook group, like what's a registered? It's, NMLS says for registered agent. What is that? Like, well, so that's a fundamental aspect of forming a company in a state, is you have to have a registered agent named. If you don't have a physical address in that state, you need to have it. It's just little things like that broker owners just, like you said, they're coming in as originators, not business owners. So they're just really on a whole lot of tools out there. And, there are lenders obviously out there that we've all heard of that have these like, broker or like business development, but they I've been told that there's no value there either. They'll give you like a real basic bullet point of like what you have to expect. Yeah. Like, so they're not getting granular. It's just kind of, very surface level.
So through your experience doing this, Evan, you've rolled this out to brokers outside of Epoch Lending, right? And what has been the impact
we got about a couple
that
dozen
you've seen in those businesses? I mean, what is?
Yeah, so I mean, right now, since we're only doing the commission calculation, and we're working on building all the other modules now. It is bootstrap. I don't have funding. I don't have a
Way to go.
large lender, sneakily giving me money behind the scenes doing any shady stuff, which, that also happens in our industry.
Sure.
So it's, starting a company completely with scratch, no funding is, I'm sure you growing a software company can appreciate how much of a struggle
Sure.
that can be, especially in a down market where I don't have much profits from the mortgage company
Right.
to bootstrap it with. But, yeah, so we are just doing the commission calculation reporting right now. And for those shops that have, a few dozen LOs, they're cutting down the amount of time they're spending on payroll significantly. It's just a matter of identifying all of those shops. And we're at a weird spot. Like, I want to be able to offer this product to every mortgage broker, whether you are a solo operator and you just want some data analytics and help you with accounting, all the way up to, our largest client right now I think has a little over 100 LOs. So, obviously they have completely different needs where they need that commission calculation reporting, whereas a solo shop doesn't need that module. So, what we're looking to build is kind of those custom tailored solutions, whether you're a one-man band or you got 1,000 out.
Do you ever see this going up to a size like an Edge, a C2, an Nexa?
You mean as far as what the software can support?
Yeah.
Absolutely.
Like this, you'd talk to your upper end currently is about 100 LOs in an organization. Do you see yourself kind of getting this to the point where you're able to take a client on that's in the thousands?
Yeah, for sure. There are a very small number of broker shops that have reached that level. Right. But yeah, I mean, absolutely. And what I find that what those shops do is they have the resources to go out and spend a couple $100,000 to have somebody develop something for them. Sure. They're just not interested in selling it to anybody else.
Yeah.
But they just want they don't want to start a technology company. They want to grow a mortgage brokerage, and those guys do that very well. And I quickly learned that I didn't want to do that. After I started Epic Lending, I'd rather keep it where I'm at, about 25 LOs that are, maintain our culture, very low maintenance, all of that kind of stuff. I'm very happy and lucky with what I have, and I don't want to mess with a good thing. So I'll let those guys that are very good at recruiting
try to grow. I mean, I agree with you, man. It's, the quality. If you find 25 people that are great, it's a very different vibe from that going to we're just trying to get anybody we can licensed. We're going for volume. It's like it's a night and day, and it's a successful business model for those that work it well. I'm not here to talk crap.
Absolutely.
To say it can't work, but it takes a certain type of personality to be able to manage that. It's like herding cats at times, and it's like you got to have a level of patience or something. So I can understand your desire to keep it small. Well, that's cool. What are some of the other points of friction that you've kind of identified on this journey that you either think EpochOS could solve in the future or that somebody needs to solve for brokers or retail?
So right now we are focused on the data analytics aspect of it. I think data is extremely important and very underrated. You don't know how to steer the ship of your business if you don't know what's ahead of you. And there's really no way to do that again, unless you are very good with spreadsheets, all these fancy formulas, all of that kind of stuff. So we are building out with, everything that EpochOS is built from scratch. It's not on anything else. It's not built on Salesforce, which our industry has an unhealthy obsession with. I'm not really sure why.
I don't know why either, man. I mean, Salesforce is overpriced. It's powerful. I'm not going to talk shit about it, but
yeah.
Man, you got to have deep pockets and patience, and you could easily build something yourself for cheaper if you got the patience to be able to go through that process. You probably have about the amount of patience necessary to just start a software company.
Exactly. Yeah. And that was kind of my thing. Like, and if you're building a software company, it's like $100 a month per person or something like that, I think. So you've got to, let's say you offer at the same price I do for EpochOS today, $200 a month. 50% of your margin is going straight to Salesforce.
Yeah.
And then you got to make up that other 50% with we're in the Microsoft Service program. We're not even paying for Azure right now. So I'm not even paying for hosting for our app. And we get Power BI for free, which is what we're going to build in there for the data analytics. These large companies do all sorts of really cool things to help people start businesses. So I'm capturing, virtually 100% of the margin because I don't have to pay some, framework to do all that. So yeah, we built everything back to what I was, getting at was that we're going to do Microsoft Power BI. It's what we're going to use for the data analytics. And for those of you who don't know, Microsoft owns a good chunk of OpenAI, the company that owns and operates ChatGPT. So Microsoft is probably in the lead in terms of building AI into their entire ecosystem. So Power BI included. You can literally, after it's all built out, you have your data model all properly configured from all of your different sources. You can literally type in the Q&A box, give me a breakdown of all of my loans I closed in 2002 by mortgage loan type. And it'll literally give you, the volume, the units, and all that kind of stuff, give you that report. So for those of you, the brokers and owners out there, when you're doing a renewal, they ask you what your volume composition is, you can do that just like, snap the finger, just type it in, chat GPT style, and it'll give you that. So between that and all sorts of cool visualizations of your performance, forecasting for your, from a finance standpoint. So, in Arrive, you've got your estimated closing date and it's approved condition status. We know how much revenue and the loan officer commission that's going to be coming out of that. You can predict your profitability, 30, 60, 90, 120 days down the road, all automatically, because we are constantly refreshing your data from
What are some of the
Arrive.
most important analytic points that you feel brokers need to have their eye on that maybe they don't? Like, because obviously I'm big on data too. I mean, as a marketer, that's like, if you're not into data, what are you doing? It should be data driven. So I'm very much similar to you, but from an origination standpoint, right? The marketing analytics kind of stop at the point of pre-approval. So I'm curious what you feel are the most relevant data points that people need to have their eye on.
Yeah. So for me, if I was an originator, I would be focused all on kind of, and we do long-term envision to put this in the platform, but it's very, very, very expensive, is all that market-driven analytics. So, the companies like MMI out there. Then you've also have My Home IQ is just, I think this month or last month, they're launching their intelligence platform where you can literally log in, identify a loan officer or a agent. It breaks down your 5-year history with them. It'll identify, additional opportunities. It can certainly help from a marketing aspect. And then for the broker owner side of things, it's really measuring all of the, where can you improve in your business? Like, can you easily measure how fast you're closing loans outside of UWM because they do it for you? Be able to filter that by lender. Like, how fast are we closing with this lender? How fast are we closing with that lender? Which of my loan officers are slow and which ones are fast? Which ones are profitable, which ones are not? Like, can you really easily, without a lot of work, be able to measure all of this stuff within seconds?
I'd be curious and
I would venture to say that 99% of broker shops cannot do that.
I'd be curious in your experience, and maybe this is something you guys are thinking about at EpochOS, or maybe it's something that you have, or I guess maybe you haven't thought about, but I'd imagine there's a strong case to measure profitability per loan type and even get as granular per loan type per originator to see really where you're at. Do you feel like there's a sufficient enough variance in profitability for a brokerage per product type to be actually
Not really for product type, because if you're a compliant shop, should have the same margin across the board. Because if you don't, you're opening yourself up
Right.
to an unnecessary amount of risk. If you were a retail shop, obviously that's kind of the dirty little secret of our industry. Subsidize our P&Ls on the backs of veterans and the underserved, is just this kind of the model. You have a 250, 300 bit margin on conventional. So you can, screw over your government borrowers with 400, 500 bit margins, and it all kind of blends together, in the broker shop. That's not supposed to be possible. And that's why our pricing is typically so much better on government loans than retail
That
is.
makes sense. Well, so there is a disparagement though. If somebody, like, let's say you're doing a DPA, right? Like that obviously is going to be a lower margin aisle.
Yeah. Exactly. And there's been I know that I believe it's the CFPB put out, kind of guidance on that. And they were like, we really don't care. Like, it's technically still a violation of LO comp even on a bond loan to pay less. That being said, it seems like pretty much everybody in the company does do it that way. So, it's one of those things where everybody's breaking the law, but it's not enforced.
Well, I mean, they're breaking the law in a way that it sounds like in that situation is good for the consumer. Is that why the CFPB is not really worried about it?
I believe so, yeah. And their focus is really on fair lending type of things. That's why you're seeing all those articles out there with, appraisal bias of, values being lower with minorities than they are with white people and things like that. Those are the kind of things that they're focused on. You might have see if you've been fighting a mortgage broker from Illinois for like 3-4 years now because he went on a podcast just like this and said, he basically redlined an entire community
Really?
on a podcast based on kind of what he said in his personal beliefs, so to speak. They're going after things like that.
Interesting.
They don't seem to care about things like LO comp and other things that I feel like they should be focusing on, but they're not. And then you also have the complication of, what the CFPB wants and then what the states want. And they often don't talk well with each other. So a lot of people feel that they're safe to pay their loan officers 1099 because their state doesn't have a stance on it, or they explicitly say that 1099 is okay, completely disregarding that you could be violating a federal law. And who I'm most scared of is the IRS.
Right.
At the end of the day, because if you're not meeting the IRS's definition of an independent contractor, you're not an independent contractor.
Right.
And that is a very fast way of going out of business as a mortgage brokerage. And there's precedent for that as well. It's happened in the past. And with their 87,000 new agents or whatever, I'm not going to try to play with them.
What's your fear of the
and
IRS?
Square up.
Part what drove you to Puerto Rico?
Yeah. I mean,
that is quite preference.
If I had a way to pay less taxes, I'm gonna do that.
Well, it's
for sure.
not about paying less taxes, Evan. It's about paying the appropriate amount of taxes for your specific situation.
There you go. Exactly.
I love it. Okay, well, what would, just in your experience as a broker and now on the tech side, what is either kind of a positive message of hope or maybe an action item that you would want to give to originators that are listening to this podcast?
I've kind of said this in pretty much every podcast I've done and interview that I've been a part of, is that I know that there's a lot of people out there like I am that have probably from a very young age have that entrepreneurial spirit and want to start their own business, but they're afraid to. They don't want to take the risk. They feel overwhelmed with everything that they want to do. And my message to them is always, and maybe this isn't so positive, but I think it should be thought of in a positive way, is that you're always going to regret not trying something later than trying it and failing. It's okay to fail. Like, I've started, before we started this, it's, we mentioned the title company that I tried launching, and I don't want to say that it necessarily failed, but I realize it's just not really a focus that I should be putting my attention into. And I couldn't find a person to really, take the reins of that and grow that business. So I'm basically just phasing it out. So I tried it. I thought that we could do it well. We did do it well. It's just that we didn't really have a good business development strategy in mind, and I couldn't focus on that. So we're just letting that go. And I learned a lot from that experience, and kind of spreading myself too thin. But I don't regret it whatsoever. So
Right.
it's everything to me is a learning experience, and don't not do something just because you're afraid of the risk, I guess. So it's because the risk isn't as much as you think it is. There's a lot of misinformation out there, especially if you're in the retail channel, of what's fed to you by your managers, because obviously they're going to say anything to keep you from going and becoming independent. So, trust all of the people who have come over to this side, and most of them haven't gone back. There's only been a handful that have. So, I feel that the originator, should be independent. I mean, you should be able to decide what lender to send your loans to. You should be able to have that freedom to make lenders compete for your business, and not work for one lender that can jack up your margin at any time, and you're just forced to sell their products, their pricing. You can have it all in the broker channel, in my opinion. So that would probably be my advice to really any originator, whether you're going to start your own shop or, I think that you should join the broker channel, working for somebody else, ideally before you start your own company as well, just because it's tough I did that, and it was a little tough learning all that stuff at once. I'm like, what the hell is borrower paid comps?
Right. All the nuances of
just
navigating that.
Exactly.
Yeah, that makes a lot of sense. I think that's a great piece of advice. It reminds me of when I was in the insurance space. I was what they call captive before I went independent, and I remember feeling a sense of resentment when it finally clicked to me. And this took me a long time for this to click. How the hell did we ever accept a situation where we identify as captive? Like,
yeah, we don't use that terminology in the broker channel or in the mortgage industry often, but it's literally the same thing. The insurance industry is exactly the same way, because you could, if you work for like a Liberty Mutual, it's just like working for a Movement or a Fairway. It's the same exact concept. Whereas, and then you get like the quasi independent, like I guess like the Gooseheads of the world, and then you get your true independence of controlling your own brand, and ideally you can sign up directly to the carriers and not have to use some kind of middleman, all of that kind of stuff. So there's a lot of parallels I've found in the insurance industry to mortgages, more so than people might think.
And it's interesting how you use the word independent, and that's they're independent brokers in the insurance world too. And I'm just like, who doesn't want that? Who doesn't want independence? Like, what do and I'm not. There's some great retail shops out there. So it's hard because it's like I'm not trying to talk shit about them as a company, but
of course
the model is kind of wrecked, right? It's like
it's a dinosaur model.
Yeah. I think that there's probably an angle in the future where those companies who aren't independent, in a way, I could see kind of a blend where it's in their best interest, it's in everybody's best interest for them to have kind of more wholesale access, where they're getting a smaller piece of the pie, but now they're getting a larger piece of market share. I think that there's probably something there that where there's a necessary evolution as because brokers will, from what I can gather, from just my exposure in this industry, helping currently hundreds of originators, some retail, some broker, and I think that it's going to be inevitable, man. Brokers are becoming more and more popular with every day, and it's probably not happening as fast as a lot of people were anticipating or hoping, but the broker channel is definitely becoming alive. And it's cool to see.
Yeah. And that trend has been happening for the better part of the last 5 years or so, of that rejuvenation of the channel. And, yeah, I mean, it was as low, I think the market share was as low as 7% at some point. Now it's back over 20. And I believe over the next few years, we can start to approach 30-40% again. And yeah, I think it's inevitable. Mortgages, to me, I think mortgages are getting easier to do. You're getting more and more of the, if you're a smart originator, you're leveraging day one certainty. You might get appraisal labor. You can literally do a purchase with a agreement of sale, and like a driver's license, and that's it for documents.
Oh yeah, the process and the product is going to become continually more commoditized. I think the differentiation comes where people leverage, they start to build and leverage their actual personal brand. It's really the difference between a Tesla that has an Elon versus, I mean, name a competitor of Tesla. They exist. Nobody knows them, right? It's like there's a main difference because he was able to leverage that personal brand. And I mean, obviously it's a different scale, but I think that that's really going to be the future, is the originators that focus on the relationship, not the product, because the product will kind of sort itself out. I mean, you talk about even underwriters, like I feel like the writing's on the wall. Like you talk about AI, you could probably, with current technology, train a pretty damn good underwriter through AI.
And there are shops that are doing a pretty good job of, maybe not necessarily right now with underwriters, but you definitely have where a human used to be like indexing files or, through OCR, like pulling the numbers up, like you don't have a human actually do. So there's certain elements of that transaction now that are that are completely systemized. And I do think underwriters are next. Obviously, that starts to get into the, the delicate areas of dealing with the government and the agencies and all of that. But the agencies, in my opinion, while we may not think are moving, I feel like they're moving faster than a lot of mortgage companies are nowadays, where they're experimenting with pilot programs. You got things out there where you can link your bank account over the last 12 months. And if you work in the gig economy, you can get credited for, your DoorDash income instead of having to wait 2 years to prove that, a Schedule C or whatever. So you can get that kind of cash flow analysis automatically just running in the US. And you're start seeing more and more of that, where mortgages are going to go closer and closer to completely dockless, over time.
Well, and I mean,
sure.
the legislation obviously is a whole separate argument, but from a technological standpoint, just knowing what I know about AI and technology as a whole, I think that you give me or you a week with it, I think we could do a pretty, bang up job of having an automated like a truly automated underwriting, that's incredibly accurate and fair and comprehensive. So it will be interesting to see the future of this. Evan, before we close, one final question I always like to ask every guest I have on. What is a book that you've read in recent years or months that you feel, and by read could also be an audiobook, that you feel was transformative that you would recommend to our audience?
I'm terrible. I am not as diligent of a book reader as I should be. I am one of those like fanatic researchers. So I read a lot, just not necessarily a book. And it's something that I really need to, obviously start doing more of for like a mindset shift. So what I will say, the next book that I am going to read is Atomic Habits.
Nice.
because I've gotten so much positive feedback about that book. I don't know if that's cliche at this point because everybody talks about that book, but I've heard that I can get takeaways out of that no matter what. So that will, and I'll make that commitment that
It is the
I'll
future
start
book
reading that.
recommendation.
By
What is a resource? You
there,
like
yeah,
to read a lot of resources. It sounds like what's a resource that you feel maybe people in the industry should be paying attention to?
Honestly, I don't really have any kind of specifics. I read a little bit of everything, and that really goes for when I'm reading about politics stuff too. Like I don't, I like to keep an open mind no matter what. So like, that's why I'm like, how can you watch, like Fox News or MSNBC with like their slant, like they're clearly biased.
Right.
Like read a little bit of everything and then come up with your own opinion and don't follow the herd, I guess would probably be my, um, suggestion. I remember there's the guy, I won't name names, but if he happens to listen to this is a shout out to him. But I remember in a very small face, mortgage loan officer Facebook group I'm a part of, he was calling us a bunch of sheep because like, we would tend to have this like kind of tribalistic, um, mentality and just not looking at the full picture and just like following this one like kind of idea. It's like use some critical thinking and make up your own mind and don't just follow somebody because you think that they're, I don't know. We all put our pants on the same way every day, you know? So just be an independent thinker, I guess. And I guess even that kind of has a negative connotation nowadays when you say that, but you should be independent in your thinking for sure, would be my suggestion. So, I read a lot of different things. I subscribe to MBS Live for kind of the market analytics. A lot of people follow, do MBS Highway as well. So you got all of that kind of insights that are important. And this one's so important, but just read your guidelines, subscribe to the FHA mortgagee letters. So you get them, in their first release, VA circulars, Fannie Mae selling guide updates, like all that kind of stuff. Know your craft. Like, Preston, I know you're the marketing lead gen guy, but like there's a lot more to being a loan officer than just, lead gen and marketing. Obviously you need that business, but you got to be able to talk back at the beginning of this podcast, you got to be able to talk confidently about your product and be that true expert. That's what's going to keep you in this business. And I don't think technology can very easily replace is being that true advisor and guide for somebody that is really nervous. And that's why we're lucky is that consumers don't really trust technology when it comes to buying a home. Like they want people to be experts, and there's still a lot of lack of experts in our industry. Like, you've got that perpetual part-time people that don't really know what they're doing involved in the process on both sides of the transaction, whether that's a realtor or the loan officer. Like, continue to set yourself apart and write that, Gary Vay's perfect example, just like content. Like, maybe you don't have to put 30 things out that I think he suggested it at one of the AIM Fuse conferences that he spoke at. But, content is king, and I'm guilty of that too. Like I need to be doing more content. That's why when, people ask me to do a podcast, I'll make sure, all right, that's awesome. It forces me to get on and talk about things and make content. And hey, people find me through it all the time. And I get messages from like recording testimonial videos from four years ago, like, hey, I saw you talking about leap ops, and give me more, insight into what you talked about in the video or something like that. And, believe it or not, people do consume all that content, and I'm surprised all the time.
Yeah. That's great. So the resources that you would personally recommend from your experience are actually, I would say, less conventional, but common. I mean, I would totally agree with your recommendation. Resources like an MBS Live, an MBS Highway, or even as simple as the guidelines, which, I think that's a healthy recommendation. I think that's great. Awesome, man.
You would think that that's pretty obvious, or goes without saying, but it's not. I still see all the time the most elementary of questions on social media that people ask about the business that they should know, or could have just been an easy Google search away.
Yeah.
Google still seems to be a very underrated tool nowadays.
Yeah, well, I mean, if I didn't know guidelines were easily Googleable, but if that's the case, there's really no excuses.
Especially Fannie and Freddie, it's all indexed on you can type in anything in Fannie Mae.
Wow.
Say, what rental income Fannie Mae, all the guidelines for Fannie Mae conventional loan on rental income right there at the public's fingertips.
Dang, well, if that's the case, it's definitely a matter of time before AI does all this really well.
This is true.
That's
This
awesome.
is
Well,
true.
Evan, thank you so much for joining us on the Lendsetter show. It's been a pleasure talking about this with you. I'm excited to see what you do with EpochOS, and I think it's cool that you're using your own platform through Epoch Lending to flesh this out. And I just as a former a co-founder of a software company, I know how much goes into that, and it's unsexy. It's honestly not sufficiently appreciated because it's an uphill climb, and especially when you're self-funded. We were bootstrapped as well. I know how much that can, you put your blood, sweat, and tears and a lot of your money into it, and people just don't tend to understand all of what goes into that. So just want to let you know, real recognize real. I hope that ends up being everything you want it to be. And if I can ever be of support in your journey on that, let me know.
I appreciate it.
Yeah.
Thanks for having me again, Preston.
Awesome. Well, that's a wrap. Thanks, and we'll see you guys on the next episode.